Let's bring in John Ryding, Brean Capital Chief Economic Advisor. You've been listening, John. How would you summarize what we're trying to figure out and everything else?
Well, I think both Rick and Steve made some very good points there. I've been flagging this issue, and I think we talked about it the last time I was on CNBC, that the rise in the unemployment rate has not been really due to a weakening economy. I mean, the GDP data over the last 4 quarters through the third quarter of last year's 2.3%. I don't think the economy is as strong as the third quarter 4.3% print suggested. If we look at the jobless claims data, they've been low throughout the year. So we're really not seeing a pickup in layoffs, which I think is where the first blow of economic weakening hits. What we have seen is very, very limited gross hires, new hires. And that has fallen to a large degree on the younger segment of the population. And I'm quite convinced by the thesis that what's happening here is that AI is proving to be a cheaper way of hiring new labor, as it were, than actually hiring people. A lot of entry-level jobs are being taken over by AI. We can debate how effective that is if we want. I've had my own negative experiences with some of the calling platforms at various companies, but nevertheless, I think that's what's happening. And so if you cut interest rates in an attempt to stimulate hiring, it's a little misguided because cutting interest rates lowers the wrong price. What you need to do is to effectively lower the price of labor to get new entrants into the labor force, which is what we need. But lowering interest rates lowers the cost of capital and potentially makes implementing these AI systems even cheaper. So I don't think the rise in the unemployment rate that we've seen is a particular sign of economic weakness, though I do disagree a little bit with Steve's point that the SOM rule, and we've used that rule for many years, has worked regardless of the level of the unemployment rate. We mustn't confuse. Recessions occur because of a downturn in economic activity, which is about a change in activity. But no, I don't think we're in a recession, and I do think that this lack of hiring is not addressable by cheaper money.